My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content.
Hey gang, today we have a special guest who is very accomplished in real estate. Judi Paré does not just one thing, but she does multiple things in real estate. She's a very active investor, focusing on multifamily properties. She's also a developer, so building stuff from the ground up. And she does property management just for fun as well. Probably not just for fun, but she takes care of that. And she's got a ton of experience educating other people on how to get into multifamily. So, Judi, welcome to the show. Great to have you.
Thank you. Thanks so much for having me. It's a pleasure.
All right, Judi. So I kind of gave a little bit of an overview there, but can you give us the 30,000 foot perspective of you and Plenitude and what you guys do when it comes to real estate? By the way, love the name of your company, Plenitude. That is a good name.
Oh, thank you. Yeah, it means abundance. And when we were choosing names for the company, we wanted something that was simple, that was around wealth. And our tagline is building wealth with purpose. And that's simply because we are very passionate about affordable housing and passionate about doing things that have some sort of social justice around it, like accessibility and affordability. So the development projects that we're working on do have a component of accessibility as well as affordability in most of our development buildings. We build from the ground up, like you said, apartment buildings and townhouses and multifamily, depending on the land and what we're allowed to build in that zoning region. We typically we like to stay within the lines. We don't like to do anything that's outside of what the province wants or what the municipality wants, and so that makes it a lot easier for us to get approvals. And so we're working on some affordable housing initiatives. We started out with vacation properties. To be honest, I had a couple of townhouses to begin with, and then we went into vacation properties. And we do a lot of. We have a resort up in Northern Ontario that sleeps about 40 people. So we specialize in the property management of that and vacation properties. And we have also international properties that are vacation properties. And so when we say we do property management, we manage the property manager at that location, because we have a number of properties in Italy on the Adriatic Sea. And then with our developments, we have, what else are we doing? We like to build houses. We've built houses, but we used to build houses for resale. We have one project currently that is a development of 20 homes in a small community in just north of Hamilton. It's still Hamilton, but it's in the Freelton area, and we're doing a 20 home development there. We're at about 50% pre-sold right now, so we're very excited because we've just been notified that we're going to get some institutional lending on this project. So we're pretty excited about that.
Congratulations. Mm-hmm. So the existing portfolio of multifamily properties, what does that look like? Where are they located? How many communities do you have? What's the door count? That sort of thing.
Yeah, so we're in Hamilton, Brantford, and Windsor is where we like.
Province of Ontario, Canada, for all of our.
That's right, in the province of Ontario and in southwestern Ontario, and we like to stick to communities that are growing, either through immigration or through employment. And all three of those cities have those components. We have one project in Hamilton currently, two in Brantford, one in Windsor. And the one in Windsor is 50. It's a 60-unit apartment building. Brantford it's currently a 7-plex. We're going to convert that and change it to 128 units. And then we have another one in Brantford that is an 18-unit development. Hamilton, one of them is just finished. It was a smaller project of 8 units. We just finished that. And we have another development. We actually own the land right beside the GO station, which is Metrolinx and is part of an arterial transit system between at Toronto and Hamilton in the greater Hamilton area. And we own the land adjacent to it in Hamilton, Ontario, where we're going to build a 246 unit apartment building, 20 stories, that will eventually be sold from our development trust into our income trust when we're completed that.
So most of your properties you build to hold, or do you buy existing multifamily?
Yeah, we built to hold, and the little one that we just did in Hamilton was an industrial building, and we converted that to an 8-unit. It was slated to be a condominium, but we all know what's happened to the condo market. So what we did is we converted the condominium into just a rental property, and we kept it, and we're holding it. The ones in Brantford are all built to hold. Same with Windsor. We have a development project in Hamilton that is a build for sale, but it's fit for purpose rental building. So when it's completed, we will likely sell it to the REIT that we manage. We're an asset manager, so we'll likely sell it to that REIT unless somebody comes along and wants to buy it for a better price and it helps our investors out. And if that's the case, then we'll sell it to the highest bidder and to the best bidder, and it'll be an apartment that is fit for purpose, that is 100% rental with a daycare facility inside of it as well. And that one is at the transit system, which is really cool because people can just drop their kids off, go to work, and come back and pick them up right in the same building. So that's kind of neat. But yeah, fit for purpose rental buildings that we're building. We don't have any right now that are already built, except for the 7-plex. We have a 7-plex in Brantford that's already built, and so it's totally tenanted. It will be.
So sorry. Besides the projects that are going to get built, how many units do you have under management right now that are actively rented out?
Let's see. Just under 20 that are actually completed. And then because our portfolio has gone up and down, right?
Yes.
And we have just under 20 right now that are completed, and we have about 600 units that we're building.
Got it. And they're actively getting built as we talk, or they're in the process of getting permits and all that kind of good stuff?
Yeah, we're in the process of getting permits, except for that development of the 20 homes that are in Frilton. We're expected to break ground on that one in the next couple of weeks.
Interesting. Okay. Very, very cool.
Mm-hmm.
So a lot of developers and builders and whatnot are kind of gun shy these days because of huge rising costs and construction materials and labor and all that kind of stuff. How are you guys overcoming that to make this make sense, to pencil?
Yeah, we're constantly looking at our performas, to be honest, and we're looking at the performas every day. We're keeping an eye on pricing and on price of materials and whatnot. And sometimes the political landscape is driving some of the agenda. There's been, 1 or 2 projects that we held off on and focused on areas where it was less expensive for labor and whatnot to move those forward. Mm-hmm. And we let go of a project recently. We had a project that was another 160 units that we let go of last year, and it was because of that. It was because of the difficulty in getting funding, difficulty in, and the pricing was going up. So we decided to let that project go. And so we're constantly looking at what materials can we use for one, and what the market that we let go was a more expensive market. So we let that project go, and we moved to projects that are less expensive to build in. And by that, I mean development costs is a big factor. We're working with a lot of the municipalities to lower development costs, to get rid of those costs completely in some cases because of accessibility and affordability. So those are the things that we're looking at to sort of mitigate that risk of rising costs is, well, where else can we save money? We can save money when we work directly with municipalities and when we work with their initiatives around affordable housing. It's great that we're passionate about affordable housing because it actually is in line with government initiatives as well. So if we just stay in our lane and stick to that sort of thing, we're finding that we're still very profitable. And,
What about the whole CMHC Select and all those kind of...
Yeah, well, we would be looking at the construction financing, the CMHC construction financing that's available to do the builds. We have enough equity in our properties that we qualify for the CMHC construction financing. And
how does that usually work, Judy, for loan to value? How much do they typically lend?
Yeah, they'll give you 95% loan to cost.
Loan to cost.
Okay.
Yes.
So it comes down to the cost of the property, and there's some sort of nuances that you have to be mindful of in when you're transitioning from the construction financing into the MLI Select. And that's to ensure that you're actually getting the best economic value and you're able to pull out some of that capital, right? Pull up that lift that you've created. But they will give you the 95% loan to cost, which is great because it means you don't have to raise as much capital. And really what you're looking to do is really just raise 5 to 15% of the cost. We already have the land. So there's not a land acquisition piece of it that we have to worry about. It's just the rest of it, the equity piece of it and the cost of construction. We're constantly looking at our performance and we review them on a monthly basis to ensure that, keeping on top of the municipalities and what's going on and where can we save some money is really important. We have a team that takes care of that piece of it. And I take care of the investor piece of it and getting their involvement. And then I also manage the legal, tax, accounting, all of those sorts of things. So, which is, the fun part.
They got the number side.
Yeah.
Side.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com.
Well, that's the whole other side of the business then, isn't it, Judy? It's investors, investor relations, that sort of thing. Sounds like you've been doing this for a while. Tell me a little bit about your insights to raising capital, especially in today's environment. We've interviewed a lot of folks south of the border from the States. They're having a heck of a time getting investors on board just because so many of those multifamily deals went sideways. I don't think it's been the same situation in Canada, but is it any tougher these days to raise capital than before, or what are you finding?
I think it is. It's been a lot tougher to raise capital over the last 12 months. I think there have been some significant losses in people's portfolios, and with the talks that are happening south of the border and some of the tariff discussions that are happening, and wood is a large commodity in construction. Right. And so anytime that we start having to send our lumber south and get tariffed on it, and then it just increases the cost of it when it comes back to us because we were milling it south of the border. And now you bring it back and you're using that. You've always got to be very mindful of the construction costs, just the lumber costs. I know during COVID, for example, I was in the middle of a large construction development. Each one of my houses went up and cost almost $50,000 for the build because of wood and because of the lumber. And so that's something that you have to be mindful of. It is difficult right now. People are struggling. People are worried. It was worse a year ago when the interest rates were so much higher. So people did not have the liquidity and the ability to access their capital because their interest rates were significantly higher. So they weren't able to do different types of investments. And I'm finding that now that the interest rates have gone down, people are starting to have discussions now about investing again. And I think what's going to happen at the end of this year, and it always happens at the end of the year, is people look at their portfolio and they say, what have I done? What have I done this year? How have I performed? Have I grown my wealth? Have I done this for my family? And if they haven't, and they find that they're sort of even or flatlined, it's usually because they haven't done anything or they have done very little in the world of investing. And I think what's going to happen is in January, you're going to see an increase in people investing. Investor confidence is going to come up every time we have these discussions about tariffs or what's happening south of the border. South of the border has a very big influence on mindset up here. So I think that that's the biggest thing that we've had to overcome is the investor mindset. Are they ready to invest? Do they feel confident in the Canadian economy right now? And so far, it's been kind of flat for the year. It hasn't been, we haven't seen a huge uptick in investor interest. But I think that's going to change. I think it's going to change in the next
I know
quarter.
you've got a big kind of affection towards females, women getting into real estate and female investors, which resonates with me, not because I'm a female, but because my mother was a real estate investor back when I was a kid. So I kind of grew up around that. Are most or a lot of your investors women, or have you got, is it pretty even?
That's a really good question. I'm going to say that it is driven in couples by the women.
Yeah.
And I'm going to say this at about a 65-35 percentile. More so the women, and it comes down to, and I think a lot of it for our portfolio is because of the social impact. So there's that social impact around affordability, accessibility. People make a conscious decision of if they're going to have the same ROI in product A as they are in product B, if they can do something that's better for community and social impact, they're going to choose that product over another one. And so women are very influential in that way. And I don't know if you know this, but there's been some interesting statistics out there about women in investing. Women are less, they're more risk averse. They tend to be a little bit more risk averse when it comes to investing. And they have a tendency to lose less money because
actually, I did read that. So my take on that was women make more are more conservative, but end up getting much better returns on their investment than most men. I mean, that's a generalization, but it's
actually a statistic in top CEOs as well. I mean, when you're looking at the top 500, the Fortune 500. Those that are led by women have a higher tendency to have greater profit. And the reason behind that is because of their risk tolerance, is they have a lower risk tolerance. And so because of that, you're actually going to make more money. And a lot of people have this mindset of no risk, no reward, but it's actually the other way around.
Yeah, smart risk, more reward, I guess, might be.
Exactly.
Yeah, I think women tend to go for, in baseball terminology, guys are going for the grand slam home runs, and women are going for base hits.
They're going for RBIs. That's what they're going for, is how many can I bat in, right? And and I think that's it's incremental profit and incremental change, and just constantly moving the dial forward. That's one of the things. One of the things we haven't done this year is grow our portfolio. We've made a decision consciously to finish what we started. Let's just work on what we've started and do that really well.
You've got a lot to work on. That's for sure. We've got
a lot to work. We've got a lot to work on, but it is really only 6 projects. So
some pretty big ones in there. So
they're big ones, but a project of 8 units runs the same way as a project of 246. Okay. Yeah. It's the same planning department. It's the same people. It's the same process. And so really it's 6 projects going through the same process. So if you have a really good process team that's really good at project management, it's 8 units isn't any different than 200, really. The difference is the money it cost. So it's getting that funding and getting the institutional lending and doing that makes the big difference. If you're going to do a small development. I've done a lot of small ones where I'm just building a house or I'm renovating an industrial building, and we haven't always kept everything that we've done. So when I've done those projects, I've used private money. Now, private money is expensive, but it's easier. So some of those projects you get done quickly because you're using private money. Now, these big projects that you're doing, rental properties out of, you're going to take your time and you're going to get that institutional lending.
Of course, that just makes sense. So, Judi, as we're wrapping up here, if people want to connect with you and find out more about what you do and how you do it, where should they go?
They should just go to our website, plentitudeinc.com. We've got a contact us button on there, and you can just contact us right there at plentitudeinc.com. And that's the easiest way to get a hold of us, because we have a team that manages that inbox, manages that form, and will get you any information that you want.
Fantastic. Judi, thanks for being on the show. This has been great.
Yeah, thank you. Thanks for having me. You have a great day.
Everybody, take care. We'll talk to you on the next one.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com.